Hello, everyone. Good morning from this part of the world. And depending on whichever time zone you are tuning in from, good afternoon and good evening to you all. Welcome to today's Forex Morning Mastery, our midweek review, where we shall be evaluating and looking at how well the asset we are monitoring since the beginning of the week has been doing, and of course use that opportunity to prepare ourselves for the second half of the week, which of course promises to be another exciting opportunity for us in the market. Well, so far this week, we have been doing pretty well across the assets we have been monitoring. Remember, we took on the USOILSPOT, the USDJPY, which we started trading last week, and of course the XAUUSD, which has hit an all-time record again, giving us some significant amount of profits to scoop on. So it has been quite a tremendously profitable week for us all in this community, and we are going to be looking into the details to see what has happened and how we will be preparing for today's trading session. And I encourage us all to stay tuned in, as you do not want to be missing out on the valuable ideas we will be deliberating on today. My own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I will be your host, as I will be taking you on a trading journey. So fasten your seatbelt and let's get on the ride. And for those who are joining us for the first time, you're highly welcome. The Forex Morning Mastery is an educational platform where we come together to have an understanding of the behavioral patterns of market participants, then using that information to strategically position ourselves for the next move. This happens 3 times in a week, that is Mondays, Wednesdays, and Fridays, 9:30 a.m. West African time, 8:30 a.m. UTC. So you're highly welcome, and do not hesitate to engage in the comment section. So with that said, we will be diving right into the business, and as usual, our daily routine is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, we do want to see what has been driving the sentiment in the last couple of days. And based on the asset we are monitoring, we are focusing on impactful events from both the United States and the Japanese economic docket. Now, looking at the data we have here on the economic calendar, on Monday, October 28th, and Tuesday, October 29th, there are no high impactful events, so we had to include the mid-tier economic features, and based on that, we had some event from both economies. So on Monday, we saw the unemployment rate from the Japanese economic docket, which came in a little bit lower than what market had expected, and of course higher than the previous and lower than the previous month, which is obviously a very good development. The unemployment rate is at 2.4%, so the lower it is, the better it is, showing that the labor market is doing very well, which will definitely give some positive traction for the Japanese yen. However, we're still yet to get that traction needed from the yen based on a lot of factors which we will be deliberating on when we go into the USDJPY chart. Then on Tuesday, we had the housing price index from the United States coming in higher than market had expected. Well, the most important one for me is the JOLTS, a data that it's considered to be a labor-oriented data. It's a survey done by the U.S. Bureau of Labor Statistics, collecting data from employers, including retailers and manufacturers and different offices each month. Now, if this data comes in lower than market had expected, it shows that job opening had reduced in the last 30 days. Now, if we look at the previous month, we had a 7.86 million consensus were projecting 7.99, and of course the actual data came in way below what expectations were, and the previous month data at 7.443 million. So it shows that there's been a little bit of contraction in the labor sector in the United States. Now, moving on to today, Wednesday, October 30, we have a bunch of high impactful events to look out for today from both economies. We have the ADP employment change from the United States economic docket. And for those of us who are not familiar with what the ADP is, to put it in simple terms, this is a report that provides the number of new jobs added in the U.S. private sector in the last 30 days. Now, this data here, it's a preview of the official jobs report, and strong numbers can boost the US dollar as they signal a healthy economy, while weak numbers might put pressure on the US dollar by suggesting slower growth. So if we look at the previous month data here, it came in at 143,000, and economists at the moment are projecting that the data will be lower than the previous month at 115,000. So we look forward to see what the actual data will be. Will it be just as market had expected, below expectations, or even beyond expectations? So the timing for this one is 12:15 p.m. UTC. That's about 3 hours from now, 4 hours from now. So we do want to be marking out our timing on that particular one. Then 15 minutes after, we will be looking at the GDP, that is the gross domestic product annualized for quarter three, a data that's usually expressed in annual growth rate, measures the total value of goods and services produced by the U.S. economy. It is considered to be a key indicator of economic health, as if the data comes in higher than market had expected, it shows that the U.S. economy was able to expand in the last quarter. Now, looking at the previous data here, you see we had a 3% expansion in the U.S. economy. So economists are still projecting that we will be seeing another 3% expansion in the last quarter. So we look forward to see what the actual data on that one is going to be like. So that's 12:30 p.m. UTC. Then later in the day, we also have some other mid-tier economic features from the Japanese economic docket. We have the large retailer sales. This is coming in about 11:50 p.m. UTC. We have the retail sales, retail trade, of course. These are monthly basis, measure the total value of goods sold by large retailers in Japan, and of course, the higher the number, the better it is for the yen, and the lower, the more the worse it is for the yen. So these are events we are going to be looking forward to, especially if we are considering the USDJPY asset. So of course, the anticipation of this event usually has a way of influencing the sentiment and character of market participants, which we can actually see reflect on the chart as price action. Now, talking about price action, let's go into the chart. And the first asset we are going to be taking on this morning is going to be the USOILSPOT as usual, of course. And what an interesting situation we have here on the USOILSPOT. Since the beginning of the week, the market has been very, very choppy, going through a consolidation phase, which further buttresses the level of uncertainty in this particular market. Though we had some selling potentials at the beginning of the week, remember we sold the breakdown of the $68.35 level as price moved over 120 pips in our favor before that consolidation phase began. And since then, we have seen a situation here where price action has been confined within the $68.35 level and the $67 area to emphasize the prevailing uncertainty in this particular market. And for those of you who saw my commentary yesterday on the USOILSPOT, remember we were able to spot a temporary demand zone around the $66.90 level and the $67.15 area, emphasizing that sellers are finding it difficult to break through that particular structure. So as a result of this, we identified this as a demand zone, and I did updated us. Was it later yesterday evening that we will be buying a reversal setup from this particular area, which was exactly what happened, as we currently have two buy positions triggered at this point. We had one at the $67.15 level yesterday evening, and of course we also had another breakthrough at the $67.80 level. So two buy positions triggered at this moment. The first one currently running with about 78 pips in profit, while the second one is still struggling to gain some traction, but still in profit of about 13 pips. In about 13 pips at the moment. So it is advisable at this juncture that we move all stop losses. Let's secure some positions right now. And if you would ask me, I will be suggesting that anywhere around the $67.40 and the $67.50 area seems reasonable to place a stop loss order at this point, giving enough breathing space for price action to move around. So we hope to see how far this momentum is going to go. And with a well-secured position at this juncture, what are the chances that this momentum will continue to the upside? How are we going to see buyers continue to push price higher, or will sellers be strong enough to negate all bullish attempts? Well, before we go into the details, we also need to understand why all of a sudden price gained some traction yesterday after dropping into the $67 area, and this could be attributed to the unexpected inventory drop. And according to the API report, we saw a decline in US crude oil stockpile by 0.573 million barrels, contrary to the expectations for a 2.3 million barrel increase. Now, that is a surprising reduction, helped by, of course, reduction which has obviously helped support crude oil prices at this point, where that report suggests that demand may be higher than market had anticipated. So for us to have a reduced stockpile, we know what that means. It means that demand is definitely higher than the supply in the market, so they had to eat into the stockpile to be able to replenish the market. So for me, this could be a bullish signal for this particular market. However, the insignificant number compared to what we have been seeing in the last couple of months may not really make a statement to support the crude oil prices. But another thing that I'm also going to be banking on is the announcement made by the US government yesterday, as they are planning to buy up to 3 million barrels of crude oil for their strategic petroleum reserve. Now, this delivery is expected to be scheduled for May of next year, but the anticipated purchase may likely increase the prices of oil, as this will increase the demand in the global market, and it could signal tightening supply too as well. So it's looking positive for the US oil at this point in time, but when will that bullish momentum begin? But that doesn't necessarily mean that the US oil does not have negative drivers at the moment, which we definitely want to be taking into account. Remember, I told us on Monday that OPEC Plus is expected to ease its production cuts beginning in December with an additional 180,000 barrels per day. Remember, OPEC Plus has been cutting production cuts, but right now they are trying to ease that down and increasing production of this commodity. And this may likely, this could move, could increase global supply, potentially putting downward pressure on oil prices. So I'm not sure how the market participant will be digesting this information and how they will be relating to the implication of this to the market at this point, since it's still going to begin in December. So the sentiment, well, could definitely influence how the market will play out. Now, another factor here has to do with the geopolitical tensions in the Middle East, as currently we have reports indicating that Israel Prime Minister is discussing a potential diplomatic resolution to the Lebanon conflict, which could weigh on crude oil prices at this point. So if tension ease, definitely demand for oil as a safe haven asset may decrease, leading to lower prices. Now, with this contrasting views, how is the market expected to navigate this current market dynamic? Well, for me, I will say from what I was able to pull out from the global news, the path of price at the moment is very unclear, and we can see from the chart that the market has been consolidating in the last 3 days, caught within this range bound structure to emphasize the level of indecision in the market. Though we have two buy positions running at this point, so that is why I mentioned earlier that we ensure we move all stop losses, secure it around the $67.50 and $67.40 level at this point in time, while we monitor how price action will be reacting to the $67.80 level. It could take about an hour or two before this whole situation will become clear for us. But one thing we should also understand is that the upcoming economic event from the United States, we talked about this earlier, the ADP employment change, which is coming up in about 4 hours from now, and the gross domestic product annualized for Q3 could be playing a significant role. And of course, we know how influential these data are to the US dollar. And considering the fact that the US oil is a US dollar denominated asset, whatever happens to the dollar will definitely rub off on this commodity, on the price of this commodity. So if the data supports an ascent in the value of the US dollar, definitely oil prices will drop, because it will become much more expensive for other currency assets to convert to, hereby reducing the demand. But if the data coming in today becomes a negative traction for the US dollar, then the reduced value in the US dollar could likely increase the demand for crude oil. So the expectations around the $67.80 area will be subject to what happens during the upcoming event. As at now, I guess major key players may have stepped aside, waiting for the data to come in before making any aggressive bet from this particular area. So I will definitely be giving us some update, maybe an hour or 30 minutes into this event, maybe a temporary structure on the 15 minutes time frame to help us navigate the structure. So for those of you who are with me on my Telegram platform, I will definitely be dropping in some updates, some structural updates to guide our decisions as soon as the event draws near. So this is my simple view on the US oil spot. The structural details here still supports a bullish ascent, and the only condition that will make me sell is for price to drop below that temporary demand zone we identified earlier. So we said yesterday that we will be selling only the breakdown or retest of that particular structure. So this is my simple view on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right, so in the absence of no questions, I want to assume that we are all on the same page. So with that said, let's move right into the next asset on our watch list. Stay tuned. So the next asset we are looking at this morning is the USDJPY, that is the US dollar against the Japanese yen. And since the beginning of this week, there has been um, the decision. There's been an unclear decision at the moment as price action continues to consolidate. We have been buying. We have a buy position active at this point in time, but still currently running in a loss of about 24 pips. As you can see, we had the buy position triggered around the 153.245. That was on Monday. And since that moment, you can see price has just been oscillating within that area. It dropped down, went back up, dropped down here, went back up. You see, it has been consolidating, which is a clear indication that there is an uncertainty going on in the market. And even though the US dollar still has room for finding new highs, the Japan's finance minister's emphasis on monitoring FX moves increases the likelihood of government intervention to support the yen. And this, for me, is a very good signal that anything can happen within the next couple of days. So as a result, major key players in the market are very, very cautious of making any aggressive bet at this point in time. Then another factor that could have influenced the cautious approach from key players in the market is the anticipation of the Bank of Japan's policy decision, which is coming up tomorrow. And this, for me, is creating a cautious support for the yen. Then another factor that we cannot ignore is the economic concerns from the Japanese yen depreciation, where yesterday the economics minister, I think his name is Akazawa or so, voiced concerns that the weak yen is raising import costs and affecting real household income, which could limit private consumption. Now, this awareness at this junction may pressure authorities to consider policy actions like interventions and the like. And for me, doesn't look promising to buy at this point in time. So it's very important that we exercise patience. For me, I'm just going to allow this position to run through its course, and if it's going to be in a loss, no problem. I'll just watch through and see how far the trade is going to go. Now, another factor that could influence the uptrend scenario is uptrend scenario on the USDJPY, that is would not be in favor of the Japanese yen, is the speculations of Japan's ruling coalition losing parliamentary as majority. That was on Sunday, and this, of course, has raised concerns, potentially limiting the Bank of Japan's ability to tighten monetary policy further, and this could weigh significantly on the yen. Then the US dollar is still very resilient at this point. Despite some softness, the US dollar remains supported by recent economic data and the US Treasury bond yields too as well. Now, for me, I'm still not sure where price is likely going to be heading based on these fundamental factors. But if we look at the structural details on the chart, remember at the beginning of the week, we were able to acknowledge the fact that price action was running on an uptrend scenario where we had a couple of ascending trend lines. And the major one here is the one we spotted on the 4 hours time frame. Let me show you that quickly. So we had the structure here on the 4 hours time frame. Hold on a second. Let me extend it out a little bit, and I will be thickening it so that I can emphasize this importance to this current structure. So let me give it a 3. So now look at what happened last week. We saw price action break out of that trend line for the first time in about 2-3 weeks, and price came back to retest the structure. And since price tested the 153.850 area, we have seen how buyers have been finding it difficult to break through that area. So that area has been a barrier for buyers. And is it likely that price will come back again to retest that trend line in an attempt to continue the uptrend move, or will the trend line be breached finally to incite a sell-off? So you see, we are at a critical juncture at this point in time. So I don't know if price will drop into this trend line. If it does, we want to monitor price action around this trend line to see how the market reacts to it. If any form of reversal pattern evolve from here, we buy the breakout retest of the neckline to join an uptrend continuation. But if price drops below the trend line, that will be a good opportunity for me to sell. So pending that time happens, we'll continue to monitor price action. Let's allow this current structure, this current positions to play out. Let me see what happens on this one. And depending on what happens, and if anything interesting comes up along the line, I will definitely be giving us updates on my Telegram platform. So let's see how the market will play out here. Price is back within that range bound structure we identified at the beginning of the week. What direction will be the breakout? Well, we don't know. Let's wait and see how far this is going to go. I will be giving us updates on both my TradingView and Telegram platform. If you have any questions, feel free to let me know in the comment section. we continue to look out for patterns and structures that support the uptrend scenario. Sorry about that, Wokocha. Thank you very much for that feedback. I never knew my mic was off, so I will have to do that all over again. All right, so like I was saying earlier, it has been a wonderful week for us on the XAUUSD as we saw price continue to find higher highs and higher lows, breaking new records during the course of price movement. And of course, the driver for gold has been very positive, from the geopolitical tensions in the Middle East to US political uncertainty and the weakening of the US dollar due to the recent retreat in US Treasury bond yield, which has kept the US dollar below recent highs, and of course supportive US data as well. While the US economy still shows resilience, there is a less aggressive Federal Reserve easing expectation, which is boosting the demand for gold, as the sentiment in the market is leaning towards a 25 basis point cut interest rate for next month. Now, for me, this has been a very supportive factor for the price of gold. Now, let's go into how the week started. What are the situations we saw on this chart that led us into buying the gold? Now, during the first half of the week, is it the first half of the week? I think the first 18 hours of the week, we saw price action confined within a range bound structure, as you will see here, between the 2,740 and the 2,724, giving us an indecisive picture. And this, we were talking about the potential that we could see an extended sideways trading activity due to the upcoming US macroeconomic event for the week. We were talking about the GDP, the ADP employment change, the US manufacturing PMI, the average hourly earnings, and of course the non-farm payroll coming up later in the week. But surprisingly, the market did not wait for that data to gain some traction. And with the technical structure we had on the chart, we were more or less confident that price may continue the uptrend. Now, one of the key factors that we were looking at was this ascending trend line we spotted on the 4 hours time frame, remember? And you know how we use our ascending trend lines. As long as price remains above that structure, we will continue to look out for patterns and structures that support the idea of buying. Now, with a reversal setup identified around the 2,730, an area which shares a confluence with our ascending trend line, it was a beautiful opportunity for us to buy. Remember what I said? I said the only condition that will make us sell the XAUUSD is for price to break down, retest the structure where continued selling pressure will trigger a bearish bias, and obviously this never happened. So since the breakout of the 2,730, we've had multiple entries. Remember, we added more position at the breakout of the 2,740. We also added more at the breakout of the 2,759 as price action continued to find and break the previous high. Now, in my commentary yesterday, I did updated us with a new structure. For those of you who are following me on my TradingView and Telegram platform, I updated us with a new structure where I was able to identify an ascending channel which price action had respected. So this was where price action was as at the time I updated us, around the resistance line of the ascending channel, and I marked out another level at the 2,770 to capitalize on if price action ever breaks out of that structure. So I gave two options here. One is buying at the breakout of the 2,770, and if price drops into the support line of the ascending channel, we'll look out for buying opportunities from there. Obviously, the second one never happened. Instead, the first one was what triggered, and we saw price climb up. And for those who joined from that area yesterday, you must be currently running with about 117 pips in profit at this point in time. And for those of us who stayed faithful to our analytical approach, well done and kudos to you. So at this point in time, it is high time we want to be moving all stop losses. Let's secure this position while we wait for new trading opportunities around this area. And if you would ask me, I will suggest our stop loss to be around the 2,780, which is right below the resistant line of that ascending channel between the 2,780 and the $2,777 area seems most appropriate to move all stop losses to. And the reason why I say that we move stop losses to this area is basically because of the demand around this particular area. And of course, secondly, a breakout of the resistant line of the ascending channel could say price come back, retest the structure to continue that uptrend move. So this is why I said we move all stop losses into this area. We're still looking out for more buying opportunities around the structure, especially if price action evolves into a reversal setup. So that is what we are doing here on the XAUUSD, and congrats to everyone who has been part of this trading this profitable journey. Now, as it is right now, technically speaking, the higher time frame indicates slightly overbought conditions. Remember, price is within uncharted territory, and there are chances that the fear of missing out could come in, and this could lead into major key players taking some profits off the chart prior to the economic event coming up today, which could significantly cause a crash to the downside. So because of this, I'm wary of where we are right now. And then the strong US consumer confidence report that came in yesterday and other economic indicators may temper, or let me say cap, the upward potential for gold prices at this point in time. So we are at a crucial juncture, and at this point, traders may watch closely for the upcoming U.S. macroeconomic data, including the ADP employment report, the GDP, and the PCE price index, which is coming up later today for further direction to where price is likely going today. Now, with this information here, how do we intend to navigate the structure? How do we intend to prepare for the trading opportunity around this area? Now, I'm scaling down into the 15 minutes time frame so we can see things in a clearer perspective. So now the first thing we can acknowledge here is the fact that price is trading above the resistance line of that ascending channel. So we can say this is a ascending trend line. Now, since price action broke out of that structure, price had continued to remain above it, and look at what we are finding here, a sort of reversal setup gradually unfolding around this area. Now, whenever we identify a reversal setup like this, the next thing we want to be doing is to mark out the neckline of that setup, and of course the breakout of that neckline will be validating the potency of that pattern. So we are looking at somewhere around the $2,783.50 level. So you do want to be marking that level out right now, as a breakout retest of that structure will be all we need to continue an uptrend move at this point in time. So we have our neckline situated at the $2,783.50 level, and of course stop losses will be way below the ascending trend line. So I want to have a support line right here. So we want to mark a support line right here. So our support line will be around the 2,779. So we have the 779 here. So this is our support line of that range bound structure, which interestingly lines up with that ascending trend line. So if price maintains a bullish traction and breaks out of the $2,783.50 level, we are looking at more buying opportunities in this market. But if price drops below the 2,779, look at how beautifully it shares a confluence with that ascending trend line. So if price drops below that ascending trend line, which is the resistant line of the ascending channel we identified on the 1 hour time frame, I am of the opinion that we are back within seller's territory. So let me show you what is looking like on the 1 hour time frame if price drops below that descending trend. So look at what we have here. So you can see this is the ascending channel I'm talking about here. Okay, let me highlight it for let me do a visual representation of what I'm talking about so we can be on the same page. So look at this. We have the resistant line of the ascending channel, and then we have the support line of the ascending channel. So what I'm simply saying here is that if price action drops below that trend line, retest it, we are back within seller's territory, and we can be looking at joining a sell move all the way into the support line of the ascending channel, which will be dovetailing to a minimum of 130 pips, which is not bad at all. So if that is going to be the case, we are looking at that. And if price gets into the support line here, we shall look at how the market will react to that structure. Are we going to be having a double bottom structure or any form of reversal pattern to continue the uptrend move? Or will price action break down the trend line to inside for the selling opportunity? So these are the things we will be looking at. But before then, when price gets into those areas, we shall act accordingly. But at the moment, price action is trading right here, at least in the last 2 to 3 hours. We can see price trading around that resistant line of the ascending channel. So back into the 15 minutes time frame, this is the structure we are going to be using to navigate the current market dynamics. So let's see how the market will play out around this area. So we have a simple trading setup to help us navigate the structure today. Like I did say, a breakout retest of the 2007A3 welcomes buying opportunity, and the breakdown of the 2779 will welcome selling ideas. So let's see what happens here. A beautiful range bound structure to help us navigate our this current market dynamic today. So this is my simple view on the XAUUSD for today, and of course I will be giving us updates on both my TradingView and Telegram platform if any new or interesting setup evolve before the ADP employment change report and the GDP report that will be coming up later today. So this is my simple view here. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon. Cheers. All right, so in the absence of no questions, I want to assume that we are all on the same page. And it's on this note, we have come to the end of today's Forex Morning Mastery. Good moment with you guys. And I just hope that we are able to build on the momentum we started the week on. We were able to take on all the 3 assets we're monitoring since the beginning of the week. The USOILSPOT still struggling at the moment, and we've already identified trading setup to guide our decisions on that one. And the USDJPY2 is still struggling, where we see price action consolidating within a range-bound structure as market participants are not sure of taking any aggressive bet due to the potential intervention from the back of Japan. But the XAUUSD has been one of the most profitable assets on our watch list for this week, as we saw price action break another record, and if finding another record again during the course of price movement this week. And congratulations to everyone who has been part of that profitable journey. So we shall continue to monitor price action around the structures we've identified today, and definitely if there is anything new or any new trading setup prior to the event we are looking forward to, I will definitely be giving us updates on both my TradingView and Telegram platform. So it's on this note I would like to wish us all the best of luck, and for those who are joining for the first time, glad to have you around with us this morning. I hope you are able to gain one or two things from what we have discussed today. If you did, you want to be part of our subsequent editions. Friday is the next one, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing and see how we will be managing ourselves during the course of the last trading day of the week. So I wish us all the best of luck, everyone, and do have a wonderful evening. See you all on our comment section on both my TradingView and Telegram platform. So do have a wonderful moment, everyone. See you all on Friday. Cheers. Bye-bye.